Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 5th of August. So we find ourselves on on-farm payroll Friday. Again, it's come around very, very quickly, this one, it seems to have anyway. And the markets, as usual, are doing the exact thing you would expect before non-farm payrolls, and that's gravitating to the most important support or resistance zone in the area. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. So we'll start out here with the Aussie USD. Look, this one's been really good this week. I think it's been very sound in terms of how it's traded. We knew we had an interest rate decision from the RBA this week on Tuesday, and it certainly did what we expected it was going to do. It hit the 70 mark pretty easily and then came down from last week all the way down to the zone that we thought it would, which is around that 68.80 area, 68 cents. So really what we've got here is a 20 moving average as well. So it was a very logical trade to take. At that resistance, as soon as it started to sell off, you could see that we found that support at the 20 moving average and at the roll reversal zone, which wasn't unexpected and a pretty easy trade to target. But really, when you look at the at that zone, it's good to understand the zones from the bigger time frame, because then when you go to the smaller ones, you do realize that you can see here obviously very clearly it hit that zone and then started to bounce up. And if you wanted to go long on this one, even from this zone, it was very possible once it had the lightning bolt. Like you'd see, this is a 1 hour lightning bolt. Once we got to a new high here and closed above it, this was a reasonable trade long back into the zone. And you can see the 20 moving average touch was effectively the catalyst for the next move and grind up. So realistically, playing very, very nice with the technicals, the Aussie at the moment. So pretty good trading. Hopefully you're able to capture that move down to that 68.80 area. And then, again, the reversal up. So I think it's stuck into a little bit of a zone at the moment. I'm not really sure where we're going to go in terms of whether it's going to break the 70 or not. I think it needs to prove itself first. There's no need to preempt anything. I think we just trade what we see at the moment. If it fails to actually make a new high here and actually drops below the level around that 69.50 level, I would be expecting that it's probably going to pull back down to the lows again. So this is going to be a very little important area. If we get a new high and effectively touch the 70 cent mark again on the daily, not so much on an hour, but on a daily, then I would be confident that we're going to see a big move in the I'll put on the daily again for a second. We need a close above the 70. If we get a daily close above the 70 and break through this zone here, I could see it definitely moving back up to that 71 sort of in 71.50 area. A definite possibility. Probably the 200 moving average will pull it up, and the 200 moving average is very, very close to the 71.50 anyway. So a definite potential trade there if we get a daily close above the 70 cent mark. But if we fail at this point here and fail to close above here and actually close down below 69.20 on a daily, like around this area here, it's going to be potentially move all the way down to the low 68s again. The 20 moving average needs to hold here. If it doesn't hold, it's going to definitely open itself up to a move even lower down to that sort of 67.50 area, back to the lows here. Not really targeting that. I think I'm happy to trade inside this zone for now. It's a pretty reasonable zone. A break above the top blue line, we trade up to the 71.50, and a break down below the blue line and we trade to the 67.50. Very, very straightforward on the Aussie. I think that it's giving us some pretty good opportunities, but at the moment we can scalp inside these two zones. All right, we'll move on to the US dollar CAD, and look, this one's been effectively trying to struggle at survival at this key level here around that one. We're sitting here at about 128 sort of 35-ish area. It's a pretty strong zone. Obviously it's a roll reversal zone. It had resistance through here and right through there and a bit of support there. It's really, really struggling to stay above the moving averages and this level. So, and still technically in a little bit of a downtrend. So we've got to be really careful with this one. If we see a reversal in trend, like on a time frame, say like a 4 hour, I would start to look for targets up at around the 130 again. But it's got a little bit of work to do to obviously make that happen. Again, it's finding itself at a place, and we're going to talk about this a lot today on a lot of the things that we're going to look at. Non-farm payroll generally brings these markets to a bit of a halt prior to the announcement. So it's no surprise really to see it at the level that it's at. If we see a daily close below 127.80, yeah, we're going to start targeting the mid channel back down to the 200 here. And if we see a daily close above the 129 or the 20 moving average, which is actually the more important one here, it's not so much the 129, it's actually more about the 20 moving average here, then we can start targeting the 130. It's trapped in a reasonable zone. Look, it's not like it's hard to trade. I mean, there's certainly enough pips either side. It's really just working out which way it's going to go, but it's no point trying to preempt it. This is a better just a wait and see type trade. When it does get the break in the right direction, we'll be off and running. So yeah, pretty good trading on the CAD, but until we actually get a break, we're not going to really see any substantial move of 100 to 150 pips. So probably just a bit of a watch and see on the CAD. All right, we'll move over to the US dollar yen now. This one's been great. This has been playing the game really nicely. Obviously, we had the lower high, lower low sequence last week, and we knew we'd started to see that weakness. So we targeted the roll reversal zone, and we got that pretty early in the week. So you can see here we've got that was effectively the 130, 150 area we were targeting last week, and it landed there and bounced up and touched 50 moving average. So absolute classic sell-off and support touch, and then back up to the first point of resistance, which is the 50 moving average. So no real surprises there. The 20 moving average and the 50 are bearing down on each other now. As you can see, the MACD is obviously shifting quite significantly. The 12 and the 26 have well and truly crossed, and we're in the zero zone on the MACD, or below zero, so no surprises there. But in reality now, it's right in the middle of this mini channel, a little bit of an area of support and resistance. I wouldn't expect big moves today until we get non-farm payroll results out. And then that's going to be the catalyst probably for where the US dollar strength is going to go. I would be thinking that we're going to hover in this range and scalp this range until we get the break. The likely scenario is that the support probably won't hold. And if we get a daily close below this level of 130.80, then we're going to start targeting the next real level, which is around that 126.80 to 127 zone. So what I will do, I'll put a horizontal line there so we're well aware of where that is. Okay, so this is our next target if we do get a break below. All right, so 126.80. So that's where we're aiming. Oops, that's where we're aiming for if we do get a break below this level. Highly likely scenario because it is a roll reversal zone, as you can see, and it's also bearing down on pretty round numbers again too. Those areas were fairly significant. So daily close below the 131 and below this level here, and we start targeting the 127, 126.80 zone. And a break above the 50 moving average, and we can start targeting the 137 again. So really hovering in this zone for now, scalp in between these zones until we get a daily break. And if we get the daily break down below, we start to target the 127, sorry. And if we get a break above the 50 moving average, we can start targeting the 137 again. So pretty good trading, but this has been behaving itself in a very technical manner. So it's been, hopefully you've been able to get hold of this one because it's been very technically sound. All right, onto the dollar index. So dollar index again did what we were hoping it would and came down and touched the roll reversal zone this week. As you can see, it continued to sell off below the 20 moving average and came down and tapped the roll reversal zone, which of course was the opposite on the euro, which we'll check out in a second. It did go up and touch the, or very close to touching the 20 again, so it did have a little bit of a rebound, but that's going to be a little bit more prominent on the euro, so we'll have a look at that one in a second. But again, another roll reversal working out really well. And this is finding itself obviously at that place of consolidation prior to tonight's announcement. So look, let's move on to the euro. And as you can see, we've seen that continued trading underneath this zone here. The 102.80 has really been a bit of a stumbling block for this one. It's trading in between that and the 20 moving average now. So it's very condensed, and we're really until it looks like it wants to go long. It really does. I mean, it's basically tested this level twice now, and a break of this level and a daily close above it, and you could really see it moving up to 104 fairly quickly, the 50 moving average in the 104 roll reversal zone. So I will put a horizontal line there because that is our target. The 10, I'll just pop it here. Okay, that's our target. There's no worries about that. If we get a daily close above this level, this is where we are wanting to run. We're going to see a move fairly quickly up to there, I would imagine, especially with the MACD. MACD power is definitely pushing in the right direction. There's no worries about that. it definitely wants to move up. It's just a matter of whether it's got enough power to actually break through this very key level. I mean, this is a daily chart, and as you can see, the daily has touched it nearly 8 or 9 times in the last 15 candles. So, yeah, it's obviously a very prominent zone, but it is tapping it, and it's not really making lower lows though. So I suppose it's not really, it is finding itself in a very condensed channel here, as you can see, and now it's trapped between the 20 moving average and that zone. So daily close above the 103, and yeah, we can start targeting the 104 pretty quickly. But of course, the daily close below the 20 moving average, and more importantly, probably a close below the 101, and then we can start targeting parity again. So again, trapped in the zone, but if we get a break either side, pretty easy trading. I think very solid moves to the upside or to the downside of around about 80 to 100 pips. So pretty reasonable scalping trading on that one. All right, we'll move on to the S&P 500, of course, the important one before non-farm payrolls. So this is exactly where you would expect it to be for a trade at non-farm payroll. There's no question about that. At the absolute roll reversal zone, 4150 is a very, very important zone for it. You can see it's been perfect from a technical standpoint. It's given us every trade we could have possibly wanted. There's been about 5 or 6 very, very solid opportunities on this one over the last few weeks, and obviously the take profit level has been reached. Now, yeah, what it does from now is anybody's guess, really. It really comes down to what non-farm payrolls is like. I think the market is definitely waiting for it. Earnings season is, definitely well and truly all but over. We can see now we're at the all-important zone. If we get a great result from a non-farm payrolls numbers standpoint, and the market's happy, it's going to break above this level here, and then we're going to start looking at the 4,300 fairly quickly. But, a disappointing result or a below par expectation, and, we see a roll reversal here, and you can see it sell off very, very quickly from this point on. Don't worry about that. So although this is a very important zone, I don't expect it to be here for very long. I would expect that the result will probably be, a sharp move in the first instance, but we really want to wait for that daily close. I wouldn't be, getting involved in all of the rigmarole that happens in the first few minutes after the noise. We want to basically wait for a daily close and really assess what's going on next week. So a daily close above the 4,200 would see me very, very happy for a 4,300 move next week, or certainly a move to continue in that direction. But of course, if the 4,150 holds or closes below the 40.50, if a daily closes below the 40.50 tomorrow morning after the non-farm and it's had time to digest the news, I would imagine we're going to start targeting the lows again at around that sort of 39.80 to 39.50. The middle of this channel and probably the 20 moving average is where we would be aiming for in the first instance for a scalp. So that's, it really comes down, like I said, you'd be absolutely guessing, and we're not in the guessing game. So we're going to wait for the result. We know that it's at a very important zone. It's given us some really, really good trades up until this point. So really we just wait and be patient now for a close above this level on a daily, and we start targeting the 4,300. But if we see any sort of reversal around this point here and we get a close below the 40.80 on a daily tomorrow morning, and we will start targeting the 20 moving average in the first instance. And if it breaks that, we'll start moving down to the previous roll reversal zone, which is around the 3,900. So look, we've had really, really good trading this week. The markets have been technically very, very good. So hopefully you're able to catch a couple of good moves on a lot of the things that we talk about. We'll check out what happens in non-farm payrolls tonight, and we'll reassess next week. But I think we're at the right zones, and there's no real surprises there. So have a great weekend, everybody. I look forward to seeing you all next week.